live. Thank you, everyone, to being with us in this panel. We're still missing someone. I don't know if it's having some problems, but we will carry on the session. So my name is Maria Eugenia. I work for UNEPFI. I am the Latin America Regional Coordinator, and it will be a pleasure to talk with you about social resilience and what's the role of the financial sector to build social resilience. I will be here with Christine Bergeron. She's the interim president and CEO of Vancity Credit Union at Canada. I'm also with Lee Smith. She's the movement lead of Money and Pension Services from UK, and she also a good collaborator because she's helping us in the financial inclusion working group at the UNEP5. Lee is having some trouble with her phone, but I hope everything goes fine. Right. Well, for our discussion today, I think that there is no doubt that COVID-19 crisis amplified the role of the financial tech sector to provide a safety net to support SMEs and households. And today we want to discuss with my two colleagues here the role of the financial institutions serving the real economy regarding financial inclusion and financial well-being. On the other hand, today we have different panels discussing the transition to a net zero economy. So we have been discussing a lot about environmental issues, but we also want to discuss the impacts of a greener economy in our society. So how we are going to assure decent jobs, reduce inequalities, and guarantee equity and safe conditions to everyone. So, first of all, I would like to offer the floor to Christine and afterwards to Lee. And I'd like to hear from you. What do you think is the role of the financial to build a society resilience, and especially considering two SDGs, SDG number 8, decent work and economic growth, and SDG number 10, reduce inequality within and among countries. So, Christine, the floor is yours.
Sure, great, thank you. Good morning. It's bright and early here in Vancouver, Canada. So I think that financial institutions can provide a financial helping hand, of course, to people at a time of widespread need and helping them to weather the storm, really. But financial institutions also have another role to play as well. And as mentioned, COVID exposed how in a time of crisis and systemic change, economic inequality really translates into unequal resilience. And the actions that we will all need to take, whether it's addressing climate change and other sustainability challenges, have to be affordable to everyone. Because otherwise, as mentioned, then you start to see that growing inequality across. So I think financial institutions are uniquely placed to bridge this gap by using the tools of banking to help people address financial challenges and circumstances that prevent them from taking climate action in their daily lives. So as an example, after the COVID pandemic broke out in British Columbia here in Canada, many of our members needed to adjust very quickly to a new day-to-day reality of isolation and distancing, like in many places, and with some, of course, losing their jobs or part of their income. And so we quickly realized that what our members needed most at that time was to have more money available for daily life expenses, to have less things to worry about in the short term. So we looked at how we could help address those needs through our tools as a financial institution. And this is an example because I think that it gives examples for the future as well. So we did a few things. We temporarily introduced payment and loan deferral options for mortgages, other loans. We also reduced our credit card interest to 0%. We created guaranteed term deposit for members who were really worried about what was happening to their savings. You'll remember early on, it was a very volatile stock market. We also then invested that same money to help small businesses pivot their business to help fight COVID. So we created two new programs. One was to help businesses pivot, and the other was to help individuals bridge. So if they were self-employed, how could they bridge their income? So we also reactivated a fund that we had used during the financial crisis that was taking from our earnings, our past saved earnings, to help small businesses and individual members who were facing hardship. again, due to COVID and because they had exhausted their other mechanisms. So we provided also resiliency courses to help businesses and not-for-profits assess and pivot, where needed as a result of COVID. Of course, it hit not-for-profits just as much, and they, of course, are a support system. And then we also worked on a specific women's loan program because we knew that women and other groups were not accessing government programs at equal rates. So once again, we were seeing this inequality sort of happening that was not actually even intentional, but because of different ways of applying, women were doing that less. So these are responses to one issue, which was COVID, of course, and we are using the same approach now with regard to climate transition, because our perspective is that the climate transition, of course, is about people and, of course, is about ensuring that these inequities don't grow. So I think we do have specific levers as financial institutions that we can use, and they absolutely, help build societal resilience and more specifically further these achievements of the SDGs.
Thank you, Christine. Thank you so much. Yes, it's not easy times for everyone, and it's good to see the role of the density and this critical moment, especially for vulnerable people. So, Lee, I would like to turn for you and to listen. What do you think is the role of the financial? I know that you previously worked on the financial system and you are very engaged with financial inclusion, with financial well-being. So, if you can give us your opinion on that. The floor is yours. No, we can maybe now you have to turn on.
Hi, can you hear me now?
Yes.
Yes. Okay. Hi, everybody. So thank you, Maria, for inviting me today, and it's lovely to meet everyone. So my experience is both at working at one of the biggest UK banks, which is Lloyds Banking Group, and also sitting on the board of an organisation called Women in Banking and Finance for Equality, and also more recently working for an organisation here in the UK called the Money and Pension Service, which is actually an arm's length government body. In terms of the banking sector, there's a question later on that I will answer that kind of talks about how banks can give much value add to crisis like this by leveraging all sorts of different assets that they own, including people, space, and data. But I guess what I wanted to just share with you is something that we've been doing at the Money and Pension Service, which is looking specifically at creating a strategy based on data and insight for the whole of the UK to drive UK financial well-being. And what we did, and that was published in January this year, and that was a culmination of working with 1,000 stakeholders right across the UK, because as you will all know, the bank is an important part of the ecosystem that sits around a person's life, but actually it's the interaction of the bank, the charity sector, the retail sector, the commercial sector, the public sector, which actually joined together can have a much greater impact on a person. And so what we did with government is actually get a load of people together right across the UK to understand what they believed are the issues in their location based on data and insight and their sector and their profession. And that went into a listening report, which we then published a UK strategy from. And then what I did when I came in was we've organised 11 big groups, all chaired by an inclusive board. So people from different industries, different ethnicity, different genders, different professions, including the banking sector, to work together to come up with recommendations for a response to COVID based on all of that insight. So even the response is being inclusive. And things can happen at will when government, the financial sector, and the community sector really work together to drive what those recommendations are. But that would be my kind of short summary. I'll talk more about how that has worked in the UK. But yeah, I think it's about the financial sector using their resources to get everybody together, whether it be the government or the FS sector, to respond to such a crisis, because we've got to make sure that we are there for people in their lives, and not when we expect them to come to the bank, but where they are suffering, whether that be when they can't pay for groceries in a store, whether that be when they can't sleep at night and they're online and purchasing. You know, we've got responsibility about how sticky we make those journeys. We've got a responsibility to be there when they're at the doctor's surgery talking about stress or debt or whatever that is. And only by influencing the whole sector can we create the support network needed for people. That's my belief anyway.
Thank you, Lee. And it's interesting. If you can, sorry, mute now. Thank you. So it's interesting what you are saying, the importance of talking with multiple stakeholders and how you can build together new strategies and new ways of working. ILO estimated that we will have 80 million net jobs globally as a result of the transition to a greener economy with the right policies. So you talked a lot about the financial inclusion. So I'd like to also hear from Christine. What do you think is the financial sector role to engage with different stakeholders, also to bring and bridge a coverage gap and ensuring equitable transition that benefits societies and communities that are impacted differently in the transition, not only of the COVID, but also considering the transition for a greener economy. The floor is yours. I think you are mute. I Please. Now it's working. Yeah. No, sorry. Yes, yes.
Is that better? Okay, it's not showing mute, so I apologize. Great. So I think that the kind of transition that we need, to your point, will really only be achieved if governments, businesses, communities, and people work together in common cause. And I think in this context, financial institutions are uniquely positioned intermediary. So first, we are on the front lines. We hear from people and businesses. You know, we hear whether they're struggling, what they're struggling with, and what help they need. And I think governments, you know, we've certainly seen at least. From our position, they do want this feedback from us so that they can adjust their programs. We also send pretty strong financial signals that people rely on in financial planning. You know, these can enhance or slow down the uptake of government initiatives. So anything from the rates that we set, of course, it's in context of broad rates, but there's economic forecasts, there's easing or restricting of credit policies, you know, what ratios will we use or not, and those do send signals of confidence to some extent, right? Are we willing to lend or not, and based on what conditions? We also have our products and services, so which, if they are appropriately targeted, can actually help people and businesses take actions and make adjustments necessary for the transition. So I think there are ways to think of non-traditional products and services to ensure broader access to capital and banking services. You know, whether we do certain things, but I'm sure there are many around the world who do others, whether you look at retooling loans for a new immigrant who needs to reset their qualifications for a new country, or offering additional services as part of a loan that can help a client, in our case a member, reduce their carbon footprint or retrofit their energy inputs, or work with an organization to review the efficiency of their homes. You know, often people don't think of these things, but if it's offered with a product, or if we can think about it ahead of time, that they are more likely to then take that up. And I think as important institutions within our communities, we can work with the community organizations to identify and address wider needs beyond just our own clients and members, and to also communicate, you know, those needs to other partners. So we spend a significant amount of time with community partners looking to understand the dynamics occurring in our communities, supporting them, you know, as well as being their financial partner. And I really do think it gives us the ability to use multiple levers, you know, across. So products, our lending, our clients' investments, our influence with governments and in communities, our operations, our reporting and our transparency, right, to ensure a just transition where no one's left behind. So it's actually a lot of different tools and levers that we can use. And I think some specific examples, again, coming back to a COVID example, we realized quite quickly at Vancity that a lot of people who were already in precarious situations, for example, low-income retirees or the homeless, are, as we would expect, especially vulnerable to the impact of this pandemic. But we also quickly heard that the community organizations that help these vulnerable people were also struggling to keep doing their important work. And so whether this was due to drops in funding, or often it was a drop in volunteers, right, who were now at home. And so it wasn't simply about what we could do in the moment. We understood we had to think about what we could collectively do with the community. It wasn't simply about ourselves as an FI. And so with other key community partners, we created a community response fund that was able to quickly help those on the ground organizations, so they were able to strengthen and then support the other, more vulnerable in the community. So the solutions are not always direct, and they almost always require collaboration. At the same time, we've also been consulted by the governments of Canada and of British Columbia regarding their economic responses to the pandemic. So we were able to use and to bring to the table what we learned about people's changing financial needs during the pandemic, what actions were needed to best build resilience during that time. And because we were hearing directly from individuals, community partners, not-for-profits, we had actually quite a wealth of more anecdotal, but of course that could complement the data that people were seeing. And so I think the same applies to the climate transition and building resilience through concrete actions for that. Everyone here, knows that meeting the UN climate and sustainability goals will require financial institutions to develop new products and services and to adjust our lending and investment practices. But I think that playing this intermediary role with our different partners can also make a really important contribution. And certainly, it's not simply about what we lend or invest, although it's, of course, critical, but it's also who we partner with, how we think of community supports broadly that will help, from my perspective, with an actual equitable transition.
Thank you, Christine. And I think that you are talking about Canada. It's a very developed country. I am based in
For sure.
Brazil, and we know that's challenging emerging and developed countries. We have 79% of the global population is educated, 90% in high income, but only 35% in low income. So we still have a huge gap when we all look to other countries. So Lee, if you can talk a little, how can we improve the value added to vulnerable people? How how can be done to bring inclusion of such groups, especially considering not only developed countries context, but also uh, uh, countries in Latin America or Africa, for example. The floor is yours.
Thank you. Can you hear me? Yeah, can you hear
Yes,
me?
yes.
Excellent, excellent. Okay. So the question is, how do we increase the value and value add to vulnerable groups? And so I'd like to break this down into specific sections because it's not a one kind of trip, if you get my point. So the first thing is actually understanding the problem for your country. That's really important. And you can only really do that by data. And here in the UK, we tend to like to generalize and put things into buckets, but actually the more you disaggregate, particularly for vulnerability, the easier it is to come up with solutions, whether by socio-demographic or through any other means, because people are, things affect people to be vulnerable in all sorts of different ways, either because of their ethnicity, because of a state, like they might be long-term, have a disability. They might also just be, short-term, having a mental health problem through bereavement. So therefore, it's really important to understand the data and to understand the actual problem, because unless you understand the problem statement for your country by understanding the data, by disaggregating it, you're not going to be able to come up with the right solution. And it's too easy to get onto a bandwagon of, okay, we're going to do this, without actually understanding through evidence whether that will work. And just as in England, where and the UK, we're fairly developed. But for example, I've been looking for the last couple of days at financial data for BAME, and in the UK we tend to look at BAME together, but there's a massive difference. So just as an example, people with savings who are black have very little savings, but people who are Indian are one of the top savers in the UK. So it's not until you disaggregate minority groups or vulnerable groups that you actually get to the root cause. The second thing is, and coming on to Christine's point earlier about what banks can do, banks have got an enormous amount of data, and I really believe in terms of value add that a bank can do is to share their data, obviously at an anonymised level, but to be able to share their data with policy leads, with local government, with local third sector, to be able to drive the right solutions for that area. And there's an organisation here in the UK that's just set up out of Edinburgh University called the Global Open Finance Centre of Excellence. And they're very passionate about this open banking data for good, because I'm a mad believer that banks, it's not just about funding or about products, but actually sharing their assets, whether it be people or data or space. And then using that data, it's about coming up with the right design and not actually thinking that everybody is the same and looking at an average way of life within a region, whether it be Africa, whether it be Brazil, whether it be the UK, but actually designing for the range of vulnerabilities that you have within your specific problem statement. So, for example, in the UK, 22% of people have a registered disability. So I'm very passionate about making sure that the design is as wide as it can be, and we're designing for the extreme, not for the average. And that includes readability, making sure that it's got a basic readability age of 11, because looking at the data in the UK, that is the average age of financial literacy. So making sure that the information and guidance that's available to people, whether it be online or in paper, is got that readability age. Accessibility, whether that's from simple intuitive search all the way through to making sure that you're testing your products with people with vulnerabilities and disabilities. And making sure that when you finish your product and you've designed it, that you're testing again, and this is something that becomes part of your culture. And then when you've done all that, I would set targets. I think it's important when you want to change a culture, particularly around the banking and the financial sector, which we all know is very target focused, is to work within that culture in order to create good, where profit meets purpose. And I would say the biggest thing there is to have targets for good. So why not have targets for financial inclusion, for digital skills, etc., and to really leverage those assets and really understand what are the barriers to that problem statement that you have. So in the UK, for example, even though we've got great access, although we still have 1 million people without a basic bank account, it's actually mandated via regulation that people should have a basic bank account to be able to transact. But what isn't in regulation at the moment is that they should have a device, especially through COVID, to be able to access that bank account. And for vulnerable older people in particular, that's been a massive issue in the UK. So therefore, it's really important to understand what the nature of the specific issues are. So in the UK, there's a big, obviously, well, not obviously, but there's a lot of banks that are closing in terms of retail space. And so therefore, the banking sector and Lloyds have been excellent at this. And what they've done, for example, is given people a device and the skills to use it during COVID. So, again, the banking sector can have a massive impact by using, the strength of its skills of its colleagues to be able to help people. And then the end thing is making sure that you're working with partners and the practitioners as well as the third sector and also the regulators, to give them that insight and work together to understand the country needs, and that you're designing your solutions based on that. That's how I think you create value add.
Thank you, Lee. Thank you so much. If you can mute yourself, because my phone is having some echo. Yes, is better? So I thank you so much, Lee. And it's interesting you're saying that, because we are today during the day we talk a lot about climate change targets. So it's a good challenge for all of us how we have targets for financial inclusion and financial well-being. So thank you. So Leslie, I'm happy that you could join us in this session. We talk a lot about financial inclusion and financial well-being, and at this point I would like to introduce you because so Leslie Nu is the CEO of Africa Risk Capacity. And I would like to, we know that some natural disasters, it's very impactful for vulnerable people. And I also would like to take your perspective when we talk about social issues. What is the impact for these vulnerable people? And I think that you're making a great job. If you can also talk with for us, what kind of innovation can help us to protect and for disasters, and considering the risk management of our organizations, protecting the livelihoods of vulnerable population. So it will be great. Now we have another perspective of the social resilience. Leslie, the floor is yours.
Thank you very much, Maria. Good morning, good afternoon, good evening to everyone. So I would like just simply to start by acknowledging that from the perspective of insurance, there is a very big protection gap that exists in Africa. And you can measure this in any number of ways. You could look at the number of people that have an insurance policy. You could look at the size of the insurance industry relative to the GDP. And in Africa, it's that ratio is roughly 1%, whereas in the developed world, we see it being 5 to 10 times that. And then you then ask yourself, sort of, how can this projection gap be closed? And I would put forward a number of ways to do that. So the first one is by helping, whether it's countries or individuals, understand the risks that they face. We focus on the risks that arise from natural disasters. So most of my examples will be based on that. And at the African Risk Capacity, we work mainly with countries. So again, I will take maybe the country lens. So where you want to start is you go into a country and you help the country understand the risks that it faces from natural disasters. It could be droughts, it could be floods, it could be tropical cyclones, it could be earthquakes, it could be many different things. And then after the country understands the risk that it faces, it has to develop a mitigation plan. So, if, say, a Category 5 a tropical storm happened, how many people would be impacted? If a drought happened, how many people would be affected? And how would the country respond to that? And then, as part of the plan, you have to think about how the response would be financed, and insurance plays a role in providing the finance that's required to respond to natural disasters. And the insurance policy can be taken either at the country level or really at the individual level. And then maybe just getting to answering your question more directly. One of the barriers that's existed to the widespread adoption of insurance, especially by small to medium scale farmers, has been the cost of distribution. The premium that you get from the farmers is quite small, so there is a limit in terms of how much money you can spend trying to obtain the premium. Therefore, you need to come up with a very efficient distribution model. And recently, thanks to technology, we've been able to lower the costs of distribution dramatically, and through aggregators, we finally are at a point where we can provide insurance to vulnerable people in a cost-effective way. So the problem has to be tackled, I think, at the national level along the lines that I've just outlined, but it also has to be tackled at the individual level along the lines that I've also just outlined. So if we take this approach, I think we will be doing a much better job in terms of protecting the vulnerable people. Thank you.
Thank you, Leslie. It was good. It was great that you brought this insurance perspective, because we know that there is still a low penetration for this kind of product. I think all over the world, and for vulnerable people, I think it's even worse. So when we talk about financial inclusion, we are talking all kind of products, insurance, banking, savings. It's the whole package. And I don't know, Lee, maybe you can also mention what's the importance of the full kind of products for financial inclusion. I know that you are been working with financial well-being, so how this kind of products mix is important for financial inclusion, and your point of view about that.
Um, so I think the most important thing is that people feel like they have somewhere safe to put their money, and that they are able to transact no matter what their vulnerability or circumstance. And I do think that it has been very beneficial to the UK that you have regulators saying that it's mandatory that people can have a bank account, and there's certain things that need to take place for that to happen. But that is about being inclusive and not stopping anybody from being able to get one. And there's some really important pilots that are going on at the moment, which is around how do you even take people that do not have a home, and may not, and may be suffering severe mental health problems, and how do you make that product accessible to them? Because it's one thing making a product accessible, but helping people to understand it's available, helping people to know where to get help, and making sure that it's accessible. And that's difficult because some banks in the UK are better at doing that than the others. And then what happens is they over-index. So they might normally have 25% market share, but if they're really good at appealing to vulnerable customers that, let's face it, don't have much savings, then what happens is they over-index. And so the regulator has a very important role to play in that, to make sure that all the banks are playing fair and equitable and giving the right amount of guidance. The other thing with regards to making sure that it's accessible products is, and I mentioned it earlier, there's a very fine line between digital now and also financial exclusion. And money and digital is everywhere. And it's really important that we think about assisted digital to enable good access of products, so that again they're able to be accessible. And the banks in the UK have now taken that role one step further and now see themselves as having a duty of care to train their customers, their communities, and their colleagues with the right digital skills that they need to be able to access the products that are available, and making sure that those products are fair and reasonable. And we're even doing the FCA at the moment, the regulator in the UK, is working with organisations looking at low cost loans or no interest loans, all those kind of good things that could really help people get them on that ladder. Because what we do know is that when people do start to get involved and start having a bank account, then they can then learn the skills themselves, and also then when they're ready at their pace, they can move on to more creditworthy products and services to help them with their lives. But it's a big task ahead, making sure that all the products that you've got are understandable for the people that you're serving, and not the average, the extreme, is the most crucial thing.
Thank you, Lee. If you can mute yourself, please. We have 5 minutes to go. So, Christine and Leslie, we talk a lot about the COVID, because it had a huge impact in minority groups. also sent us an alert about systemic risks as climate change. So I'd like to hear from you how COVID is impacting the progress and approach to societal resilience and the role of financial sector. Like final remarks for this panel, Christine.
Sure. And hopefully I'm not on mute this time, so that's good. I think that financial institutions that focus on helping their clients weather the storm during COVID maybe, or many are, feeling short-term profitability constraints. But I do think that looking at the long term, that COVID-19 can actually show us how to make better progress actually in building societal resilience. And it could be done by understanding the importance of identifying the actual real needs. I think a little bit building on what Lee's been saying, and to challenges that weaken the resilience, right? And so my experience is that financial institutions have the ability, when needed, to quickly and creatively pivot our products, tools, and services to address those needs, if it's guided by a people-first lens. But it has to be very deliberate. And so what I have also found through the pandemic so far is that we can really find ways to help people help each other, and that societal resilience is strongest when people work together and help each other out. So, we've seen a lot of examples of this over the past few months, and certainly, we can support that as an institution, but ultimately it is people helping people and all those community supports. So, for example, we had a very good response from our members to the actions that I described earlier. But how we helped people keep more of their money for daily needs at the start of the pandemic, how we helped vulnerable members and community, and so on. But it wasn't just that we did the right thing. It was that as a cooperative, the money that we use in this manner is in a very real way our members' money. And many of our members felt that through our actions, they were helping each other and their more vulnerable neighbors get through a big challenge that we're all still facing. And I think that's what helped build societal resilience at a time when we needed it most here. And so I think it should ultimately assist us in our approach, and help clarify the role that the financial sector can and should play in building societal resilience going forward.
And maybe just to quickly add on to what Kristen is saying, is that insurance is in fact one of the oldest solidarity mechanisms in the world, where the claims of the few are paid by the premiums of the many. And we are seeing sort of the re-emphasizing of the need for having insurance to be able to deal with pandemics like COVID-19. And also it's highlighting, I think, the need for collaboration between the private sector and the public sector, because the insurance industry alone doesn't have the balance sheet to be able to support the risks, while on the other hand, the government doesn't necessarily have all the data, all the underwriting expertise to be able to properly price and underwrite the risk. So you need the private sector and the public sector to really come together and develop a product. And I am happy to say that for us at the African Risk Capacity, we are currently working on developing an outbreaks and epidemic product that will be able to at least help countries in the event of a pandemic similar to the one we have just faced.